where we're waiting to hear from Janet Yellen on Friday. What's your read as to what can be expected here?
Yeah, hi, Yousef. Well, we think that she's not going to be in a hurry to signal any rate hike. I think she's going to echo the message by Mr. Fisher, the vice chairman, basically to say that there is a strong possibility for a rate hike in 2016. She's probably not going to close the door on a September hike. She's going to want to give the benefit of the doubt, probably the following Friday release of the job report. But I think she's going to really keep the door open for a December rate hike. And a lot of people are split. I don't think they're going to take it. But we're really seeing a similar scenario to the same week or the same month last year.
So how much of that is priced into the U.S. dollar? Because some of the analysts we've spoken to feel that a very dovish view is already reflected in the U.S. dollar.
Yes, and it does, yes. It is reflected. You know, it's very interesting. When we had those minutes, they were slightly, they were neutral to the dovish side. We saw some pullback in the U.S. dollar, and we think that the recent CPI figures and the core PCE, which is the Fed's inflation goal, or the inflation measures around 1.6, is still way away from 2%. So I think that, yes, the dollar is pretty much where it is right now, and it has not done much against most of the currencies. It's down 20% against the yen, like everything else against the yen, but it's down 5% against the euro. So we think it's going to stay where it is right now until the real story begins ahead of the December Fed meeting.
Well, we've been talking to a lot of market analysts as guests this morning who say it's not necessarily what she says, but how she says it, and the tone, I guess, from Janet Yellen. How do you think, if it's not going to be the U.S. dollar, which of the G10 FX currencies is going to be most sensitive to it?
Yes, well, we think that as long as she's not going to be in a hurry to show any signal of a rate hike, I think definitely the currency that is mostly known as the anti-dollar, the euro, I think it's especially going to gain, and we could see 114 print, 114.50, and the reason is that because Mr. Draghi is not in a hurry. He wants to lay low, and he wants to take less attention, and they already extended the duration of the QE. Then they broadened or they diversified which bonds to buy, and Draghi wants to remove the onus on him. And the PMI figures yesterday, they went to 7-month high for the Eurozones. So with a clear inaction by the ECB and definite inaction for September by the Fed, we think that could probably push the dollar lower, against the euro towards 114.50. But the yen, I think that it's going to continue to gain because, look, the reason that the Bank of Japan is not doing what it needs to do to weaken the yen, which is buy JGBs, not buy ETFs, buy GGBs. And the reason it does not do that is because it cannot do that because there are not enough Japanese government bonds out there. A similar problem that is being faced by the BOE.
Yeah, but I guess that's good for the ETF markets and equity markets, right?
Yes. Yes, that's a very good question. So why does buying so much ETF equities is not successful in weakening the yen as it is in buying JGBs? Because the latter market is much bigger, and because when you're going into the market, you are the monetization of the currency there is much more effective, and the increase of the supply or the absorption of the supply of the yen is much more than in the ETFs. And the other reason is that there are not enough firms out there in Japan that are going to work with the ETF companies that are going to participate to have their equities taken, and the figures between the equities and between the bonds are not the same. And as long even if there is going to be one more rate cut, and if there's going to be more QE, equity A2E is not going to work, and we could still very well see 97 and 96 in the US dollar versus the yen.
So Ashraf, what's your top trade in this market? How do we make money?
Well, in the You know, in the FX markets right now, I think the market is getting overcrowded very quickly. I do think that probably there's going to be more. I think China has been very quiet, and I think once we're going to see the deep fundamental issues coming out there, I think there's still going to be further downside in the New Zealand dollar versus the Japanese yen and the Australian dollar versus Japanese yen, because these are the two currencies that are the higher yielders that usually gain when the Fed does not do anything, because the Fed is the only, is the only threat for them. And I think that once the RBNZ comes in and does at least 2 rate cuts in the next 6 to 7 months, I think that the New Zealand dollar versus the yen is going to weaken further, and we do think that the Australian dollar versus the yen. And also, but as for those two, I prefer the Australian dollar versus the Kiwi. So Aussie Kiwi, right now what it is, around 105, I think there is a good upside potential for the Australian dollar to push higher against the Kiwi.